Good day friends, it's Sergey Yeleseyev here once again with you. I am the founder of the AE Crypto Derivatives Exchange. Judging by your requests, we need to continue the topic of deposit overclocking with options. In the previous videos, we looked at simple options for increasing your deposit by buying simple options. In the second video, I talked about vertical spreads, and in this video, I would like to review more sophisticated, more complex strategies for deposit increase. I suggest we go back to the first video, where I talked about the fact that you should buy the cheapest options and expect that some price movements will occur and the options will rise in price 10 times or more. Let's first understand what options we can use. So let's consider Bitcoin with a short expiry series. We should take short series when the expiration is a few days away, no more. Long series still have a lot of time premium, they're expensive. Well, and a lot depends on the level of volatility, as I said before. So back to Bitcoin options. We can try to sell some expensive options in order to finance the purchase of a large number of cheap options. The price is our main reference point. For example, we can buy Strike 21 options while expecting Bitcoin to fall sharply. If we think this possibility is real, we do the following. It doesn't have to be fall, it can also be a rise. My goal is to show you a technique to accelerate your deposit. We buy put options at Strike 21 and we sell put 22. I buy 3000 put 21 options and sell 1000 of put 22 options. We open the chart, see what we get. Disproportional reverse ratio spread. Not 1 to 2, but 1 to 3. More aggressive one. The idea is that if this movement does not happen, we will lose nothing, we pay nothing. The risk is zero. If the price does not go down significantly, we will not suffer a loss. Indeed, there is a kind of a pit, but it can be liquidated. If we find ourselves near this pit, we just close the position and that's it. You should choose such price ranges where you can count on a powerful price movement. This strategy is lossless up to the price of 22,000 and the margin requirement is 107 USDT. But if the movement to the area of 19 or 18,000 is realized, we earn $4,000. It's massive, isn't it? In order not to miss this movement, if it happens suddenly, and as we know, such movements happen during liquidation on major crypto exchanges, this movement and icicles need to be spotted. If Bitcoin is falling hard, liquidation is definitely to blame. Such strategies can be used for a strong deposit increase when you have spent $100 to open a strategy, and as a deposit, it comes back to you. But you can increase your deposit by several $1,000s. This is a strategy when you wait for an aggressive price movement. Again, if this movement does not occur, you will lose absolutely nothing. You just need to be careful with this bit. But even if you forgot about this strategy, gave up, did nothing, the potential risk could not compare to the potential profit. I would also like to add that you can immediately sell options of Strike 17 or 18 and at a high price. If such a sharp move happens and you sell your put 18 or 17 options at a high price, you will immediately lock in a significant profit. Now I'm going to increase the number of strikes. 1 second. We need to sell the same number of options, 2000 options, but at a price of 300. And then we'll get an unusual chart like this. Within this area, profit fixing takes place, where I'm showing you now. This strategy can be used both for buying and selling, but I recommend this strategy if a sudden and aggressive jump in price is expected. You can also work with the price movements of Doggy, Matic, or Ether. Let's try with the Doggy. There's only a quarterly series left, but we'll try to create a similar strategy here anyway. As a reminder, the Doggy coin is reacting strongly to Elon Musk's tweets. The man is the main minus maker of the Doggy coin. We may have to take expensive call options of Strike 90, sell 100 of them and buy some cheap options, but almost all of them are expensive. Let's try it like this. We buy 300 options at Strike 105 and we have the following chart. the pit is big because, let me remind you, these options are expensive, especially at strike 105. Unfortunately, the pit is too big. It's dangerous because the doggy will be able to rise and you will fall into this pit. I believe that these options are not cheap enough for our goal of accelerating the deposit. We need to wait for the price of such crypto coins to change. We need to work with series 10 days before expiration or a week before, a month before the expiration. It's better not to look at them. It's expensive and the volatility level, look, 80, 90. It's better to work with Ether series now. It has weekly series. And that's all I wanted to tell you. Write your questions and comments. I will devote next video to topics which you are interested in. I wish you successful options trading and all the best.